looking at Bitcoin, and I'll try to keep this short and to the point. And while we took a short, and it could be a local top, and I'll give my reasons for it. The previous video, I just posted it. It's called Tutorial on Finding Levels of Significance. Gives you this method of finding all this that I got posted. Now, just to get to the point on a small time frame, why did we take this short? And you'll see. So we had a 618 level there, and we had our naked point of control. It hit it perfectly. We start to see a wick, a sell-off, and therefore we entered a short, especially when it came just below this 618. So looking at the rejection, expecting just a bit of overperformance. Liquidity is also here. That was our liquidity spot there, and that's from the previous high. So there would have been shorts if I go all the way back to whatever date is 2022. So we mapped our levels, and that will be in the tutorial. There was a previous all-time high or high for March, and so when price came down, bounced back up, found resistance. So that's where all the shorts came in. Some shorts came in here as well, and therefore we put that as a liquidity. We also mapped out our 618 level using the previous high and the low. That is our 618 level. So that's going to be a strong resistance. We've got resistance here, we've got liquidity there, and we've got the 618. It's going to be a strong resistance, so you're crazy not to enter. However, that's my point is here. The point that I'm trying to make is that was definitely a resistance level, and I would imagine a lot of people, even the bots, would be doing that as well, shorting it. Now, what do we see from a bigger picture perspective? Let's go to a small time frame first. If this is going to be bearish, it's good to have a short open. Now, this could range. It's still bullish, and the question is, what's more bullish? We had a fair bit of resistance here, and that came across. We'll do the explanation across. That was our point of value area high, and that was our main resistance for a while. Okay, so that had 1, 2, 3, 4 attempts to break before it broke up, and then you can see the rejection. So that was the reason why we had that level as a resistance. Let's just close these moving averages to make the chart a bit clearer. There we go. So we can get rid of our daily levels for a sec, and you can see how that tool allowed us to find that resistance. And so we took out liquidity, and we now hit that top resistance. So we're going to be, in my opinion, we're going to look at a few things that takes place. Now, how do I map the Elliott wave count here? I have it somewhere, just give me a sec. So that's our wave 1, 2, 3, 4, 5. Then I think we had an ABC correction. That was our ABC correction after wave 5. And then we had another 1, 2, 3, 4, 5, what it looks like there. 5, potential 5. Maybe we can go up to the 51,000 range as a measured move, and I'll explain that a bit further down the track. And however, we are still macro bullish. Now the question is, if this is wave 5, then we expect a corrective wave. And we've done this. That could be a mild correction, or it could be deeper. Now what we can do is we're going to identify our key levels in here, and we'll go to a smaller time frame. Let's go on the 12. 8, I actually like 8. 8 does a good job. So you can see how we closed off. We use our tool again, and basically we're in a range, as you can see. And the 8 hour demonstrates that we've got a fair bit of resistance to the upside. Even though we broke out of this, the upside many times act as resistance. Now, my guess is that we're going to continue to tap on this 618. So that was the first one. And I would suggest that if this was to go back up, it'll get another rejection. So that's your next shorting position. With the ETF, it could make it bullish, and we might just see overperformance and hit this level based on our measured move. And our measured move comes from this. Let's just do this. I haven't done it for a while. So let's look at our measured move. If this is our neckline, give or take, you can say that's a cup and handle in a way, potentially. So if this was a cup and handle, that's the cup. And we got this handle here. Now, if the measured move will be from there to there, and if we put it across, you can see it actually goes a fair bit. The other measured move, so that's one measured move. The other one is down here. That's a neckline. And if we do that, we'll probably already hit it. Yes, we have hit it. So this measured move all the way down could be taken there as well. From there, so what we're doing is a bit unorthodox, but the neckline is relatively there, right? So if we get that move, then we can also use that bottom, not just the top. That's the maximum. But with a cup and handle, you can also use the bottom there, and that looks perfect in one way. So that is a measured move. So it's not going to be that high. If we were to add slightly those wicks, then we have a higher move. And that's where we might get our overperformance just a slightly, and take out some wicks and stop losses here. So that's what I'm thinking, if there is overperformance. But I'm thinking that we're going to have a range here for a while, like we did here. Maybe not that long. We might even actually come all the way down here for liquidity. So what we can do now is, if that is our top, we bring it down to here, and we've got our 618 level here. Our CME gap might get closed off on this one, so price could drop. So you might say this is bearish, but like I said, it could be a mild or moderate or deep correction. So if it was to be corrected, I would think this is the level that it can go, just a 618. Here we had it all along, so there's a lot of liquidity to hunt, and then we go back up for our wave 3 and 4 further up. But with the ETF, we might just get something like that, just where those wicks are, just below it for the weekly level. And across, you can see this level is a lot of support in the past. So if it comes down, we did have some resistance here, and therefore we might find some support there. And the other aspect is that we might just get a trend line of some sort that might come into play as well. That might not be the right trend line. There might be another trend line. Could be, if we work it out. Let's see if there is another hidden trend line, is basically what I'm looking at. That's one there. So we might actually get if we come down here, that might be it. And we might just do a small ABC before we go back up again. So what I'm thinking is, if we come down, we could do that, a flat regular correction, and then up. And so the trend line, this trend line, along with this actually it's a 0.5 Fibonacci as well. There you go, the 0.5 macro Fibonacci. So this might play a role. We might actually come down further onto the trend line. It really depends on how it does it. But anyway, that's the case. I'm looking for a corrective and a range. Now, there's a number of models that we can go with. And this could be a base. And we just rock and roll from there. So we might just get that. We've seen, like if you look at this price movement, so it goes, it finds a buying climax, comes down, and then an up thrust. So we might get another attempt somewhere. Might be from there, back up again. Now, if you look at that formation, it actually plays something similar over here. If you look at that, it goes sideways or up and then hits its climax and then pulls back, takes out the liquidity below it, right? Takes it out and then goes up again. And so we might see that type of play as well. That we've hit our top. Now we're just gonna go under here and take out the liquidity, and it could probably just come about down there, the weekly level, and then back up again, and then we go for further highs like that. Further highs, and that 688.68 could be hit, 51, etc., and then another pullback, and so on. It's going to be a bit of nasty. That is another potential. Now, for the short term, what levels do we have to watch? This is my thoughts. We get our tool out. We've got some levels here. And we've already done these ones. And those levels there, right? So here is going to be a strong support for this bottom range. I'm watching this. It hasn't broken up enough to go long. I've got a short. I might also enter a long. I'll see how that goes. So my thoughts are this. 50% level. If this is our bottom, and that's our top, our 50% levels there. Our Fibonacci level, pull that all the way back. Our golden ratio is holding it up. We need to stay above here. Now what we have from a trend perspective, got the higher high, HH, and got the higher low, got the higher high here. Now, if we go below this level, if price comes down and breaks that level, we lose a trend. We might just start seeing some weakness kick in, and we might find the support and then drop. And that drop is basically to this level here. So that's a scenario that we might have. If this doesn't continue back up, find that support and another attempt, we can likely come down. And this, so we can do a short again if it finds momentum, or we play this role, we find support here, and then we put our levels up. Just give me a sec. Assuming that this will hold, then price is likely to find resistance at the golden ratio here, and not all the way up there. Could be the 786, which is roughly there, and then we come back down and that's just going to give you another good short. So I'm expecting a lot of shorts to come in. Why not? We had a lot of shorts coming in all the time here, right? We had a fake out bullish, but that could be a rising wedge topping up. If it goes below, if it goes back into the triangle, it's likely to drop, and the root of a rising wedge is a target. So in this case, the root starts around here. So we're likely to come back down, maybe overperform to get some. So we've got all these longs coming in, take out those liquidity, and even maybe target some of these liquidity levels here. The CME gaps there, I believe. CME gaps there. We might just take that out and then back up again. And that fits into that model that or the fractal that we just spoke about, where it sweeps below all of it and then rises back up. I'm going to leave that, guys. The scenario is, if you lose that, we are likely to come down and test this range, in my opinion. So if we lose that level, we are likely to retest this and then back up. And that will be a A, and then potentially a golden ratio. We'll do that on the golden ratio. This is a resistance level now, and then back down here again. So that's a ABC, and then that looks like a wedge of some sort. Hopefully it's not too confusing, but those are my thoughts. This is a very strong resistance, guys. I don't see any soon going above it, so it's just good shorting opportunities, I believe. Here we go. We set it there. And we said perfect NPOC and liquidity plus 6.8 to short. I said slightly before to short. Just my clarification and then just update the chart. Okay, so it's on the Discord. Free membership for that. Members only is different, so I decided to put that in there. But yeah, you can get free advice there. Hope you like it, and I'll catch you later.
There you have it. Please give Sam a like, share, and subscribe to his channel to support him for doing more of these posts.